This is the Getting Execution Foundations Right panel. We're really excited. To those of you I haven't had the chance to meet, I'm Norma Nieto. I'm the Director of Enablement at SBI. Prior to that, though, I did spend 3 years in our consulting organization helping clients like yourselves of all different sizes and businesses to execute and implement their growth strategies. So I'm really excited to introduce our panelists today. First, we have Carolyn Ritter, who's a senior advisor at TPG. She has 25 years of operating and leadership experience in developing go-to-market strategies for their portfolio clients to help them achieve commercial excellence. Carolyn, do you want to share a little bit about the types of companies that you work with and what your approach to value creation is?
Sure. Hi, everyone. Nice to meet you. So TPG is a large multi-asset manager, but well known for our private equity practice. We have multiple investment platforms, capital, which tend to be our largest investments, growth, which tend to be post-VC, but early in the private equity journey. And then we have a platform called Rise, which is all about social impact investing, with a particular focus on diverse investing as well as climate. And so in our operations team, we essentially have former functional executives that have experience operating. While the deal teams are oftentimes the smartest people in the room, and boy, are they smart, most of them have never run a company or run a function or run a team or been an individual contributor within a company. So we have about 40 to 50 of us that are former functional executives that are deployed to our portfolio companies to help them deliver their value plans and growth. We are growth investors, so while of course we will look for efficiencies and cost takeout, we more are looking at top line and EBITDA growth opportunities with the companies that we invest in. So.
Great. Thank you, Carolyn. We also have Richard Perez, who's joining us today. He also has 25 years of experience. He's a senior lead advisor at Apax Partners, and they also focus on growth strategy, and he focuses on revenue operations to really help companies achieve sustainable growth. So same question for you, Richard, if you want to share the types of companies that you work with and your approach to value creation.
Sure, happy to. So basically everything that Caroline just said, I'm just going to attach Apax's name to that because we're very similar private equity firms. So I've been with Apax for about 3.5 years. We are a growth equity firm. Not unlike TPG, we are more interested in growth than cost takeout. It doesn't mean we don't do cost takeout, but we are looking for investments that are either high growth or high growth potential. Oftentimes, our deal teams will talk about looking for a path to change the course of the river. So can we do new product development, new acquisition that takes a company from good to great? We work across 4 different sectors: healthcare, business services, consumer, and tech and tech services. We also work with, as you'd imagine, multiple sort of variations of that within those functional areas. And I was saying to Caroline a couple nights ago, for me, even after being with the firm 3.5 years, like I am still learning so much because there's so many healthcare businesses that I've never touched or learned about. And so it's a really exciting place to work because you are constantly being pushed to learn new things, new capabilities. Yeah. The work that we do, again, very similar to Caroline, runs the gamut of all things organic growth. So everything from what is the unified go-to-market strategy for this organization, which we'll talk a little bit more about here in a bit, to what's the right set of sales motions that we should put in place, what's our ideal client profile, and we'll talk about that in a second as well. What is the value proposition and how do we deliver recurring impact to our customers? What's operational excellence look like for our sales process, forecasting, tech stack, all the way through to post-sales. So how do we onboard a customer effectively? How do we get fastest time to value and get recurring impact so that we can expand share of wallet? So that's the sort of the breadth of things that I work on and I think that Caroline works on. And oftentimes we are looking for external partners to help us solve those problems, which is how we came to know SBI. They've helped us with a number of due diligence projects and value creation work. So part of our ecosystem is trusted partners like SBI, and they help us with a number of those kinds of initiatives.
Excellent, thank you.
Sure.
So today's panel, we're going to cover three primary topics. The first is going to be around how you assess go-to-market efficiency. What are some of the things that you might look like? The second will be how you get started on your go-to-market efficiency improvement journey. And the third will be some common areas that you need to watch out for, things that you might overlook, common pitfalls. So we want this to be an interactive panel. So in addition to the questions that we are going to ask Richard and Carolyn, we'll also be asking some of you. We'll have an audience participation question. Brian Curry will help us out with that with a microphone and walk around the room. So we encourage you also to just ask any follow-up questions that you might have. Just raise your hand and Brian will come find you. So the first question, we'll just set the stage a little bit. We'll start with the softball. So, a lot of the research that Brian shared was around the decline in commercial efficiency and go-to-market return on spend. So, the data that we shared was a lot of public companies. So question, do you see the same thing in your portfolio companies that are privately held? We can start with you, Richard.
Sure.
It's time.
I think short answer is yes and no. So there are certainly portfolio companies that struggle with the same set of issues, but it depends on where they are in their growth journey and how mature they are. It depends on their leadership team. But short answer is yeah, most certainly. We were talking in a conversation with Mike yesterday and a couple of CEOs and Caroline and myself. What I have observed in talking to SBI and other partners of ours, including benchmarking resources that we have out there, is that I think it was in Q3 21 to Q3 23, win rates had declined from 27% to 17% in most SaaS-based businesses.
Sorry, from which year?
21 to 23 Q3, 27% to 17%, right? To acquire a dollar of revenue, I think SBI has this in their research at $1.68. A different cut of that is, what does it cost you to acquire a new logo dollar? And I've seen benchmarks as high as $2.68 to acquire a dollar.
Yeah.
Right? And quota attainment, I think you guys have probably all seen this. A number of sales organizations are only getting to 30, 40% of their team getting to quota.
Yeah.
You should be 70 to 80%. So something is going wrong, and I'd say a lot of things are going wrong, but not for everyone. So you'll hear us talking a little bit about what are some of the things that you can do to make sure that that doesn't happen to you. But short answer is, Norma, that yes, it is happening to some of our portfolio companies, but many of them are in great shape. For reasons that have a lot to do with our sort of investment strategy, but we can talk about that a little later.
Okay. How about you, Carolyn? Same thing? Mm-hmm.
Same thing. We invest across the same four sectors that Richard said, as well as one we call IDMC, which is internet, digital media, entertainment, communication. So we're seeing a mix. Our portfolio is still growing. It's still performing great. But we are seeing slowdowns in that growth, not shrinkage, thank goodness, but slowdowns in the growth. Particularly, it wouldn't surprise you in our software and enterprise technology portfolio. We're seeing a possible constriction of spend, as we talked about earlier today, with rationalization of tech stack and, trying to find those efficiency gains. And trying to find efficiency gains for many years, we added a lot to our tech stack, particularly in the go-to-market space, sales enablement, all of that. And now there's a rationalization to say, did we make it too complex? So we're seeing that across software and enterprise technology, except in the areas in particular of AI and data and analytics. That we're continuing to see increased spend.
All of this is really complicated. Here's my question. Richard, you said yes and no. You said yes and no on the private equity side, right? You're seeing it in some cases. Some of that might be the oversight of a private equity firm is a lot. There's a lot more scrutiny than in a public organization. Mm-hmm. But the other piece of it is when you say 30 to 40% of the team making their number, and it should be more like 70 or 80, generally when I hear that, I say, bad plan or bad execution, one of the two. And my question is, with the pressure that private equity has to grow the assets and to exit them, in some cases, is it a matter of the company has signed up for a plan that isn't realistic in the current market environment?
Again, short answer is yes, that does happen, right? If you haven't worked in private equity, you should know expectations for growth are pretty high. And
Across a short period of time.
Across a very short period of time. It's very realistic. But I think it really depends on your hold strategy, Mike, as you know well. It depends on what the growth strategy is. It depends on the kind of business that it is, where you buy them in their cycle.
Yeah.
And so, yes, pressure from PE, who is very proximate to you, like they are in your breadbasket weekly, bi-weekly, not just quarterly at board meetings like a public company would be. But yeah, expectations are high. But I see a range of issues that drive that underperformance. Some of it is bad plan, some of it is bad execution, some of it is the plan's too high, but poor product planning, not really, building a new sales motion before you're ready, adding an enterprise sales motion when you've been mid-market and not understanding the implications of adding an additional motion, not having a clear unified go-to-market strategy. So there are a range of issues that organizations run into, but private equity pressure is certainly one of them.
Yeah, and I asked them.
Yeah. There's never, that's exactly right.
Yeah.
There's never one issue,
Yeah.
Okay, so, Richard, you started to hit on this a little bit. You started to talk about some of the metrics that you look at. What are those KPIs? So where do you start assessing how efficient a company is in terms of their go-to-market spend and return?
Yeah, again, had a great conversation with Mike about this yesterday. SBI is going to solve this problem for all of us, just so you guys know. They've got the metric.
They're working on it.
It's coming. So we start with unit economics. Do the unit economics for this business make sense? Is LTV to CAC within the right range, 3 to 5x ratio? Is your payback period a digestible payback period? Is it 12 to 18 months? That's going to vary by business. I think Mike was saying yesterday, if your payback period for a customer is 3 years, then you might want to think about firing your customer. You'll have to figure out what that is for your business. And these guys, SBI, will give you a good range, a good benchmark to work with. But we start with unit economics. And then we look at things like, what's the quota attainment for the sales team? What is our win rate? What does the conversion rate look like from stage 1 to stage 2, stage 4 to stage 5? Those are all really important. What does your gross retention look like versus net retention, right? So all of those things, and we sort of mapped out, I think it was like 12 to 15 metrics yesterday in this session, and there are a lot of them, but those are the core ones that we start with. And there's some other interesting angles that you could look at. I would encourage you all, I think everybody knows this, a lot of SaaS-based businesses over-invested in go-to-market, and they were growing at all costs, and meant they threw a lot at the kitchen table, right, to try and grow a business. I would want to understand what is my sales and marketing spend as a percentage of revenue or percentage of bookings, as we talked about yesterday. I would also want to understand what is my sales and marketing expense versus net new logo revenue, because that's where we've gotten, in my view, you've gotten out of skew for a lot of SaaS-based organizations. We overinvested in new logo acquisition. I can't tell you how many times I've heard CEOs say, we're just going to hire more salespeople. Bad strategy, right? That may actually end up being the right call, but not until you've mapped out 100 other things before you go on that hiring strategy. So I would want to know, what are your costs of sales and marketing for new logo acquisition? And don't forget the marketing piece. Everybody in that sort of stretch, that SaaS stretch where we were growing at all costs, was over-investing in marketing, in my view, on new logo acquisition. And I think it's time to right-size marketing on customer expansion, where there's ample opportunity to grow with people who know you. If you have the additional products that you can sell to them, that's a good place to spend marketing dollars.
Yep, 100% agree.
And
Could I ask one
go ahead.
follow-up? So what is that benchmark? You hear about sales and marketing as a percentage of say, revenue. What is that?
Yeah, I asked this question of SBI for one of our companies about 2 weeks ago, and the answer is it depends,
Yeah.
right? It depends on the growth you're looking for. It depends on the industry. Brian, Rick, you guys correct me if you see it differently, but I think you want to be in the neighborhood of 8 to 12, 13%. But if you're making a big investment on growth, you're going to push that up to 17, 18%. I've seen businesses as high as 25% that we're throwing a lot at growth. That starts to get risky if you don't have a plan to ratchet that down, but that's how I think about it, and I'll let the experts in the room who know the numbers counter that if they see it differently.
Is that sales costs as a percentage of revenue or marketing and sales?
Sales and marketing costs as a percentage of revenue, yeah.
Yeah. We've definitely, Carolyn, I was going to ask you, when you start working with a company and you're doing that assessment, maybe you take a bigger, more holistic picture, some of the things that you talked about in terms of like the core performance. If you could speak about that, that'd be great.
Yeah, I mean, all of the things that Richard mentioned, we look at. I'm frequently asked, what are the new metrics we should be looking at? And I always say they're the old metrics. They're the foundational ones. What we try to do is not just look at those metrics, but look at cuts of those metrics. So by product category, by market, by customer segment especially, so that we can really understand relative to the growth plan, make those comparisons across at minimum a 3-year time horizon if we can. So looking at the last 3 years of data, 5 if lucky. So it's those additional cuts that help us really start to get into the meat of the commercial efficiency and excellence that sits behind the number. And that's where we really want to understand, particularly as investors. I mean, we go in, we're investing in the management team as much as we are in the company. We want them to be running the business. We have companies with oversight, it's just the quarterly board meeting. It's better if we're not involved, frankly. And so do they have the inputs and do they understand the inputs to know the levers that they can or should pull to drive that number up and down? So we tend to get 2 or 3 layers deeper, but we always start with those same exact metrics. And again, in comparison to what does plan say? How much growth is supposed to come from new logo? How much growth is supposed to come from expansion? And then we like to challenge the management teams a lot around what's within the commercial team's control. So we try to peel away, well, how much is expected just from general market growth? Okay, 3 to 5%. How much is expected from price increase? We'll look at how are they doing in terms of, yielding the price increase we expected. Once you start to peel those out and look at, okay, what do the growth numbers then look like? Can you really get in and understand, the how excellent they are at actually being able to deliver growth across a period of time? So that period of time is really important for us.
Yeah, a couple of things I'll add very quickly. So I think if you were to pull the CEB folks in the room up here on stage, they would tell you a lot of the similar things because we were put through the grinder with, I'm sure you guys all remember this, our CEO and CFO at the quarter ends. They would sit us down in a room, the head of sales, head of service, head of research, and they would go through in painstaking detail, what's your conversion rate, Richard, for law departments that are 0 to 5? What's it 5 to 10, 10 to 15? And the CFO viewed that as much of a responsibility as the CRO. So point being, it is not just sales' responsibility, it's the CEO's responsibility, it's CFO's responsibility, CMO to know those numbers cold at every stage of the game, right? Second thing I would add is, Caroline hit on a really important point as well, the time frame that you use to look at your performance. So we were talking yesterday about the criticality of looking at trailing 12 months. You should always be looking at the trend line over that period. And you should also be looking at how am I performing now versus last year, and how am I performing now versus AOP. So those are all things that we hold ourselves accountable for, and that time frame really matters.
Excellent. So I just want to add a point about sales and marketing spend and how much you should spend. I would say one thing to look at is what your competitors are spending, because if they're you might think you're doing okay, but they're way outspending you in terms of sales and marketing spend. You're going to be fighting for share of voice in the market, so you just want to be aware of that. And then, of course, comparison is the thief of joy, which is why consultants love competitive benchmarks. So, you should also be looking at it from that lens. And I think to just add a little more color to what Richard said and what those of you who were in the forum with Mike yesterday about a metric that we're starting to look at is that trailing 12 months bookings over your trailing 12 months go-to-market cost. What is that ratio as return on go-to-market broadly? Because you want to start to be thinking about those bookings from a holistic lens. Is it new logo, cross-sell? Is it expansion? And then also make sure that you're including the investments in customer success that you're making, not just sales and marketing. And it depends a little bit on where you put those, but to take that as an aperture just as another indicator. So I'm going to ask the audience too, what are some other KPIs or metrics that you're tracking today that you're looking at that are, that your organization is looking at or holding you accountable to?
Well, we probably do one click down, look at product mix, if you're on-prem versus SaaS. Is that moving in the right direction? New versus base logo? You talked a little bit.
If you could hold on, because I know some of the folks in the back might not be able to hear you. And Brian will bring you a mic.
So it's really helpful.
Yeah, sorry. So we maybe one click down, so we'll look at different product mix, on-prem SaaS, particularly if you have that migration going on, new versus base logo, average deal size, how that's trending in the different sectors, things like that.
Yeah.
Probably most notable. I'm trying to think if there's anything else. And then we have different sort of, like say, use cases, if you will, in terms of where we sell into the buying centers to see what that mix looks like.
Yeah.
Those are great.
One metric I forgot on the post-sales side is on the install base is your share of wallet. So there are different ways to take a look at that. So if you have 5 products, are you penetrated at 1.1 products per customer, 1.3, 2? So we look closely at that at the install base as well. Yeah.
One I didn't mention that the firm I was at, I've been at TPG for about 20 months, but prior to that, I was leading commercial strategy and operations at a private equity-backed company. And one thing we constantly looked at, again, across last 12 months, but last 3 years, is average, contract value per rep. And then cutting that by tenure and really looking at ramp expectations. It's unbelievable how much that's not thought about, or actually how much room new reps are given and how much time to come up to speed. And again, that's a great place to also benchmark for your industry. How much is the rep bringing in year over year? And if they're not bringing in considerable more growth per rep, then what the company is expecting when you think about the normal performance curve, let alone the abnormal performance curve we're looking at, that is a great measure of productivity and efficiency and effectiveness in the sales organization. It's one of the first that we look at that I can't believe I forgot to mention. Yeah,
SPI's got a great benchmark on this. There's an audience question. Can I ask a question of the audience?
Yeah, please do.
SPI folks, you can't answer. What is a good metric to use for measuring sales rep contribution? There are a few different metrics you can use, but.
Well, I was just going to say, one of the things that our private equity firm is really focused on is attainment.
Quota attainment.
So there's a quarter over quarter. I'm very loud to begin with, sorry. Quarter over quarter attainment.
Yeah.
And so that's actually the focus of a lot of board meetings. And every month, sales enablement function is tracking that meticulously, like to the point where every week we're looking at percentage to quota. And that goes out to every sales leader. I could tell you right now, like every single rep and where they are at attainment. So that's highly correlated to our success in bookings.
Absolutely.
Yeah, and to the cost base, right? I mean, ultimately your CFO is wondering because you put a buffer on top of budget, put it out through quotas, and ultimately is our cost base producing what we expected it would? Because talent is one of the biggest costs out of the the go-to-market spend. So
one critical piece to this, and then I'll give you the answer to my question, is if you don't get the quota set properly, if you're not strategic about how you set quota, then quota attainment, while it may be good, may not matter if you got quota set incorrectly, right? And so a great metric that the SBI guys shared with me a couple of years ago that I still live by was your sales rep should be producing 4 to 5x OTE, right? If you're paying them $500,000 OTE, they should be producing 4 to 5x that.
Yep.
Right? And if they're not, then you're not getting enough production from them.
Yeah.
Right? And then if you've got a peanut butter spread approach to quota setting, all your reps are all gold at 400,000. I'm telling you right now, you do not have a gold strategy, right? You've got a peanut butter strategy.
Yeah.
And so there's a methodology which we can talk about later about how you build a proper goal, but getting everybody at a flat rate on their target is not the way to go.
No.
Okay. Anyone else have any other metrics to share, or?
Can I just drill into that a little bit?
Sure.
Please.
For new logos, I think it's fair to say that my philosophy is I set a goal that is standard for every rep, same goal if they're reasonably tenured. I agree, goal is different for expansion and renewals. Mm-hmm. Do you agree, or would you? No.
No. So,
why not?
Yeah. So I'm gonna sort of pull forward something I was going to share later. So one of the foundational things we focus on, and Caroline does as well, is we work with our go-to-market teams to be very clear about your ideal client profile.
And segment.
Your ideal client profile, everybody says they have it. They show it to me on paper when we're going through diligence. But then when I say, okay, show me how that pulls into account segmentation, account scoring, territory design. And what ends up happening is they have something on paper that doesn't flow through the process, doesn't flow through the system. If you have 300 opportunities and I have 20, but we have the same goal, probably not fair to me. And so we try to get scientific. I think the researchers in here will laugh at me for that. But we try to get scientific about how many opportunities should we assign to the sales rep and what is the quality of those opportunities. So we will go through a rigorous exercise to say, we will score this industry, we will score this size company, we will score this kind of company, this kind of executive, and that will tell me that I have 150 prospects score A's because they've met all these criteria. I'm going to push that to my best sales rep. I may give them 50 B's and 30 C's. Now I can set a proper goal based on the opportunity that I've given to them. But if everybody is given the same goal, then we probably haven't really looked at the front end of that, which is what's the opportunity I'm asking them to go after? What's the average deal size I expect from my prospect score A's versus B's? Am I having this rep call, on it in a mid-market sales motion and this rep in an enterprise sales motion? If so, those goals should probably be pretty drastically different. So all of those things are things that I take into consideration when looking at new logo acquisition targets.
Yep.
What about more top of funnel? So opportunity creation or visit creation. There seems to be a general dialogue, a lot being written about, outbound's dead, it's too crowded, SDRs are less and less productive every year. Let's replace all of them with inbound, maybe get rid of the SDRs or maybe deploy them instead to qualify inbound leads. What are you guys seeing? Are those statements true? Is it dead? What are you seeing in your companies?
I'll let you want to take a crack at it first?
That is absolutely a dialogue that's sort of happening out in space. And there are new motions, particularly in the software and enterprise technology space around PLG, product-led growth. So all that SDR spend is actually going into marketing to, bring in those individual buyers essentially to then grow them up to enterprise buyers. So we're still seeing quite a big mix, and where we're seeing the best performance is where the mix is well thought out and purposeful. Typically I'm still seeing SDR functions, but put toward the higher quality top of the segment type of customers and prospects, and then really thinking about the long tail in a different way. oftentimes we put I see putting the newest, greenest reps against the long tail of prospects, but oftentimes those are much harder to convert if your product strategy isn't on point. And so when you start to think about how much am I investing versus how much am I getting from it, that certainly comes into play. So we are seeing SDRs pull away from that, but we're also seeing more marketing spend there and fewer reps there as well. So I'm seeing a mix of all of it. I haven't seen full abandonment of SDRs, and we have portfolio companies where it's absolutely still working. But I will say it's toward the buyers that are going to have higher ACV and with products with longer sales cycles.
Yeah, I think I love to see various experts talk about how outbound is dead, cold calling is dead. Those sort of blanket statements I think are always at best comical, but it's an interesting debate to have, right? And I think you're right, Kurt, that it has gotten substantially harder for SDRs to be successful, right? Because we all have fatigue. We get it too. We all have fatigue taking calls and emails from vendors, and you never know if it's going to be a worthwhile conversation, so you just ignore it. You just delete the email, right? So here's the framework that I use to think about, and this goes back to my point earlier, what's the right motion you want to have in place, right? That's, I think, the underlying question here. And so I've got a great framework that a partner of ours shared with me that sort of lays out like this. If you look at deal volume, so is my team doing 20 deals in total a year, or are we doing 10,000 deals in total? That's on the y-axis. On the x-axis, what is my average ACV? Am I at $5,000 or am I at $300,000 or 7 figures?
Yeah.
So that's the visual that I would give you. On the far left, higher volume, 2,000, 3,000 deals per year, lower ACV, $5,000. That should be 90% inbound. You should ramp up the marketing engine if that's where you are playing. You move to the middle and you're at 15 to 20,000 average ACV and you're more in a few hundred deals per year. Now we're talking about a two-stage motion. Now you pull in SDRs to do what they do well, and there are a lot of things you need to do to support them and make them successful, and they hand off to an AE. You get further down to the right on the x-axis, if you were 100,000, 150,000, 300,000 plus, that's field sales, that's account-based marketing. So you're doing very, very targeted outreach using an ABM strategy for targeted accounts and targeted people within those accounts. So you have to look at what's the right motion for my business before you can declare is it in or is it out, and what's the right strategy here. So that's how I think about it.
I love that framework.
Yeah.
Stealing it.
Excellent. Okay, so now we've go ahead.
One quick question.
Yeah, of course.
On partner side, so we talked about SDR. On the partners where you have partner leverage, whether they're sourcing deals, helping you co-sell, influence deals, or even on the delivery side, et cetera. But how do you think about that? Or where does that factor into your sort of benchmarks?
Yeah, I mean, that is a motion, right? And so you have to decide, am I ready for that motion, right? Or, and if so, what am I going to ask my partners to do? And am I getting leads from them? They're just sourcing leads. Are they delivering? And so I think you have to, again, decide, is this an ecosystem play for us because the product or service that we're delivering needs to be delivered by an ecosystem because we can't reach those customers without them? So I'd say you have to factor it in, but it is going to be so dependent on the product you're selling, the market that you're going after, the kinds of customers you're pursuing. So I don't know that there's sort of a blanket sort of benchmark that says, hey, if you're selling $50,000 average ACV, that's a channel play. I don't think that exists. I think it's very dependent on the product or service that you're selling and what your customer base is for that and how you want to reach them. But I'd ask the SBI guys to chime in because they'll have a pretty good view on this too. Yeah.
Yeah.
You look at Europe, you can't cover all those markets directly and then meet their needs, right?
Right.
A lot of times geography is a huge piece of it. It really comes down to cost to serve, though, usually. Like, can you reach that market yourself and have control over the end customer?
Right.
Or from a cost to serve perspective, is that not feasible? Therefore, you have to leverage a partner to do so. But a lot of people are questioning their channel setup right now. You're hearing a lot of, do we go direct? Do we not? Do we have the right economics in the channel? And rightfully so, because a lot of them have kind of decayed, right? The old model of channel. We cover the channel with channel partner reps, and they kind of manage them. And it's losing its efficacy from what we've seen. So it's a good place to look at. It really challenges economics, one, but also look, are you losing revenue because of it?
Yeah.
And are other people in your space doing something different? Now with hyperscalers, there's just a lot of different motions being deployed. So
I have a portco going through this right now, and I said, why do we have the channel strategy? Is it because we're trying to expand into a new market? Because it's a new product set that we're not, great at selling yet? Is it because we depend on them to deliver? And the answer was, well, that's because what we do in our industry. Everybody has channel partners. And so I couldn't agree with you more that, looking at how much margin or how much revenue are we actually giving away in that channel, and what % of revenue is it overall, are all things everybody's looking at.
Mm-hmm.
Okay. Well, we started to talk about, we're starting to solution, so I want to make sure that's our next topic, so let's just go right ahead and move into that, and then I know many of you probably still have some additional questions. So now you've diagnosed there's a commercial efficiency problem. Carolyn, where do you start? It's a complex problem. What do you look at?
Yeah, I have a placemat, a one-page placemat that sort of outlines 9 pillars, and happy to share it. It's nothing proprietary to me or TPG, but really look across elements of strategy, operations, and talent. Those 3 things, and you can't look at just one or the other. We always start with the strategy, and in a go-to-market framework, it is the ICP, the ideal customer profile, and the segmentation. What are those segments? What were the design principles of them? How long ago did we design them? It's amazing how often we've done a segmentation and it's years old, and we've launched tons of new products and gone into new verticals or into new markets and haven't refreshed it. So that is number one. If I don't look at anything else, that's the first thing. Look at the operational chassis. I mean, they're obvious things. Do they look at input and output metrics? It's still amazing to me that for whatever the business is, whether you're activity driven or lead driven or whatever it may be, not looking at the indicator metrics to know how your teams are spending their time, how we're penetrating into the market to get to the results. Without looking at those, you don't know what levers to pull to improve the results. So we certainly look at all of that from an operational perspective, but what we also kind of put there as a next natural step, and Ritter talked a lot about this, is the coverage plan. So, how many resources do we need to go after the best fit market opportunity, which of course comes from the ICP and segmentation. How many people do we need? What can they cover? What should we expect them to cover? How do we want to cover? That's where you get into your channel strategy. That's where you get into a segment strategy. If those are the only 2 things that we do, we can get a lot of progress just by going in and refreshing and challenging conventional wisdom on those 2 elements. But I'd be remiss in then not talking about the talent. And I think where we're seeing so much, at least in our context, is this transition from grow at any cost to profitable growth is something that is almost paralyzing to people within go-to-market organizations. It's one thing to grow when the dollars are flowing, but it really requires a different mindset, set of skills, competencies, and frankly, set of experiences at times that you want to supplement your team with to ensure that we can adapt to the changing environment quite well. And so often it's, well, why aren't these reps performing as well as they used to? They used to hit quota, and not thinking about the talent aspect of it, and are people fit for purpose for what we need today and the evolution we're now undergoing. It tends to be the last thing that's thought of when it really should be of equal importance to segmentation strategy as well as coverage. I could go way deeper into all of those, as well as then the revenue operations and enablement chassis that fuels all of this work on an ongoing basis, which I'm happy to talk about. But those are the top three that I start with. Anything to add?
So teeing up talent for you a little bit, Richard. Before lunch, we heard all about the buyer complexity, how there's, on average 5 people that are touching our customers. The buyers don't know what all these people do. So this notion of self-inflicted complexity that's been happening.
Yes.
Richard, maybe you could talk about how, how did we get to that point where we're, where we are, and then how do we perhaps start to unwind that complexity?
Yeah, it's a great question. So short answer on how we got here in terms of creating all this complexity is growth,
yeah.
Right? Or growth aspirations, right? We all wanted to grow like crazy. So what did we do? We hired like crazy. We bought a lot of technology, right? That's going to make us more efficient and productive.
Went into new market segments.
Went into new markets. We launched a new product. And oftentimes organizations did all those things without really considering, was it the right thing to do? Should I have gone into that market? Should I have built an enterprise sales motion? Should I have built a PLG motion? Should I have added 5 things to my sales tech stack and 3 things to my marketing tech stack without really understanding what's the return I'm going to get from that investment, either that individual or that technology or that new market? And I think it was growth. Candidly, Norma, is like we were all chasing growth. And so we just kept adding without really starting where Caroline suggested is, what is your go-to-market strategy? And I'll say it a little bit differently. What is your unified go-to-market strategy? What I mean by that, we often look to sales to drive the go-to-market strategy, and I think that is wrong-headed. If you have a CRO who is driving your sales organization, great. But they should have the CMO on their team right at the table. Those two, if I were you and I were a CEO in your seat, I would run a test. I would say, take your CMO out to lunch and tell me what's our go-to-market strategy. Then go take your CRO out to lunch and do the same thing and see if they line up. If not, you've got issues. And I got to tell you, we've all seen it and heard it. The misalignment that happens between sales and marketing goes all the way to the ground floor, and it creates all kinds of issues down to who gets credit for this lead. No, we got to change that. That's an SDR lead. No, that's an inbound lead. That's a web form. And that's how it happens because you're not unified at the very top. So it starts with a clear strategy that says, who do we want to be? Where do we want to go? How do we want to get there? And then everything flows from there. But I think you have to take a step back and understand what do we want to do as a business? Where do we want to sell? Who do we want to sell to? And how do we want to sell to them? Start there. And then from there you can say, okay, well, I need these kinds of clients to do that. So I'm going to define my ideal client profile this way, and I'm not going to sell to anybody else. I'm just going to spend my time here, right? These clients buy these kinds of products. I'm going to do a SKU rationalization. I have 1,200 SKUs. I'm going to get that down to 500 because these 3,000 ICP only care about these 300 products or whatever it is. So I would go through a rigorous prioritization process on the strategy, on the ICP, on the profile of the people that I need, and I'll come back to talent in just a second, to the tech stack that's going to allow me to do that, to the onboarding that I need to bring them on, to the way that I'm going to serve them. I would build a very rigorous customer journey map to make sure that we're delivering recurring impacts over and over again so that I can expand share of wallet. You do those things, you build that kind of discipline, then you can start to get rid of some of that complexity. One thing we haven't talked about, I don't think we covered in Brian's session this morning about talent that often gets overlooked is management talent. We tend to want to talk about sales rep talent. That's a good thing to do. We should. But one of the most critical linchpins in your success is the quality of your frontline managers.
Direct sales managers.
Yeah, absolutely. And so how much time are they spending inside doing administrative work, filling out reports, getting you the data that you need versus out selling or co-selling or coaching and developing your team? I think Gartner did a survey on this 3 or 4 years ago. And sales managers on average are only spending something like 27% of their time coaching. That's not good. And I may have that number off a little bit, but it's in that ballpark. That's not good. I want my sales managers, if I'm a CRO, I want them riding along on sales calls and not taking over. I want them going through prep to understand how the sales rep is going to take on that call. I want them debriefing after the call. Like the vast majority of their time, I don't want to put a percentage on it because I'm not smart enough to figure that out, but it's more than 27%, right? And so I would say take a hard look at your sales management bench and say, do I have the right people? Do they know how to coach? Am I equipping and enabling them to coach? And are they effective at it? What's their time allocation on that coaching, on that selling and training? That's an often overlooked part of our go-to-market strategy.
Can I just add a couple thoughts? You hit upon so many important things. A test that I often, I say the same thing to our CEOs, take the head of marketing out, take the head of sales out to lunch, and listen for the words own versus lead. If you have your leader saying, I own this, I own that, versus we have a unified approach and there's certain things my team takes the lead on and certain things I have to rely on my chief marketing officer's team to take the lead on. Those are great indicators as to whether it's been co-created, and there's accountability oftentimes for the ultimate outcome that matters to the business. Not who gets credit for this or who gets credit for that, but it's we're unified against hitting this revenue growth number, and my team leads here, my team leads there. The next exercise I have them do is just take a blank piece of paper with an arrow on it, and go to then at least one person in every role within the go-to-market organization and say, tell me what you do within the customer journey to deliver against it. And then take your piece of papers and put them on top of each other and see how much overlap there is. Because what we also did in increasing our verticalization and going into new markets is we increased the number of go-to-market roles that we have. Let alone all the titling within them. And there's so much role overlap that exists in that role proliferation that you'll go to someone in customer success and hear them describe their role exactly the same way you might hear an inside seller describe their role. Or somebody who is a classic account manager, right? And that is a huge indication that there's wasted cost, and that there are way too many handoffs for the customer journey. And we saw it in SBI's research, and they could probably speak to it even better than Richard or I can, definitely that I can. But the number of touch points customers have to go through is quite a lot. And the amount of role overlap is insane. So one of the things we're doing through our 2025 planning with our companies is asking them to actually go back to their role design, and really think about what is unique about each and every single role, and then mapping that against the customer journey and seeing where the gaps are.
Yeah, that's so great. I'd like to let the audience chime in a little bit. Are there spots where you've started to unwind that complexity within your own organizations, or are there particular areas where you're, seeking to simplify? Started making any bold moves in that direction? If anyone wants to share.
So I'll share our problem. So we're in the middle of this, and I know it because I get a call from the main buyer who says, hey, my part-time job can't be meeting with your 9 salespeople that are coming to my office.
They know more about your company than
correct. They're not delivering value commensurate to the time that they're consuming. Right. And so we're having to figure out how do we change the time consumed versus value delivered equation. And for us, I think it's that role overlap is the biggest issue. But additionally, we'll deploy subject matter experts who are taking that subject matter expertise into the wrong target. And so how do we target better? So how do we not just avoid overlap, but how do we target better with them? But it's really just that analysis of how much time are we consuming versus how much value are we delivering? And we are fully struggling with this, have not yet figured it out. So if somebody's on the other side of this, I'm John.
Well, you're not alone. I see a lot of others struggling with it too.
I think Caroline's right. I would start with the customer journey map and say, what do we want our customer journey to be? right? And if you map that out and you say, okay, and what does it take for us to deliver on that? On the sales side, so what is the sales process and how does that map to the customer journey? Post-sales, how do we serve that customer to make sure they're getting value? Then you can get into role definitions and say, okay, this profile of person is best to do this part of the customer journey map. That's an SDR. This person is best to do this kind of sales. That's an AE. Now I need a solutions engineer. This is their job right here. And you just sort of map that out. That is what I would recommend is start with the customer journey map, to Caroline's point, map your sales process, and then map your sales roles or capabilities across that. And then I think you'll be able to say, yep, I need 2 people here and 2 people here, but I don't need 9.
The other place I would double click is in customer success. We actually just added a new executive to our team just to focus on this. So while I've built and led customer success organizations, I'm nowhere near an expert. We brought somebody on to work with our portfolio company executives on this, because if you ask around the organization, even around the executive table, describe what customer success's purpose is and the value they deliver to the organization, you will hear all different answers. And we're asking of these people to retain, to expand, to cross-sell. They're taking on inside sales, and oftentimes
product problems, right?
Yeah, solve product problems.
Tech support.
Tech support, enablement, training of customers, onboarding of customers. And then you look at the job description and you say, my goodness, do I have a bunch of unicorns? Probably not. And so that is also the place, even just within customer success, that just even in the last 5 years, the responsibility proliferation has not kept up with the role proliferation. The role has stayed just one role, but their responsibilities are a lot. And look, I get it. They're more inexpensive. It'd be great to drive more expansion through them or cross-sell or whatever it is. But oftentimes people who gravitate toward customer success roles aren't natural sellers. They don't want to be salespeople, but we're asking them to do that. And then that is another place that we're increasing so much focus. It's just kind of gotten out of hand, it feels.
Could I ask a question just on that?
Sure.
So just on that very point, I realize this may differ depending on the type of company and what you're selling, but for the direct sellers, and let's assume you do have a renewals and CS team, have you seen a trend towards direct sellers having some responsibility in that renewal or in that sort of retainment and churn mitigation, if you will? Or has that been purely kind of purified in terms of that role accountability?
Yeah, you want me to take a swing?
I was like, oh, this is a whole other Pandora's box of, I'll try not to get into Caroline's personal philosophy on this, but, look, oftentimes, I'm going to overgeneralize here, but oftentimes the smaller organizations, you start with the hybrid roles where they do most, and the critical question is, when do I start to have, hunters versus farmers? And then the question is, what does the farming look like? Which is often, I think, underthought, actually, and making sure that you have farmers who can sell. And usually that's not well thought out, which is why we have to try to complement it. But, oftentimes they are very different profiles of people. And I'd love actually SBI's perspective on this. I'm sure they may disagree with me. But oftentimes you're not getting, you might be getting some internal efficiency, but you may not be getting the productivity returns from the profiles. But again, it depends your industry, your customer journey, your product set, your market share in the segment of customer, like all of that really does play in. There's no one right way. What are your thoughts, Richard?
Yeah, I think that's largely right. Like, you have to be real clear-eyed around what their role is. What do you want them to do?
Yeah.
Sales is very different than renewals, right? And I'm stating the obvious, I know. As Caroline pointed out, those are very different skill sets. Now add, I need to expand share of wallet. Am I expanding share of wallet with a net new customer within the same, net new buyer within the same customer, the same company? Then that's probably more like a true sales motion. I probably want my sales rep doing that. Is it an upsell? Same buyer, just selling more of what they already have?
Or a different product.
If I have the right, CS profile, then they can handle the upsell. Marketing has to factor in. Can we do in-app, promotion? Can we do marketing emails that help with the expansion? So again, I would step back and say, what's the right motion for what I need, and what's the right skill set for that motion? What I don't like to see is I'm going to have customer success do everything, and I don't have the right profile of people doing that. I also don't want to see multiple handoffs happening for the customer where I sold you, now Caroline's going to work with you as the customer success rep, and now you're going to have an account manager who's going to try and renew you, and you've got a different tech service person who's going to solve it, and we're passing you off to 9 different people. That's a bad situation. So I would go back to, what's our strategy? What do we want to have in motion? What products do we want to sell? And then what's the profile of talent that we want to have? But you should not have, if you don't have the right skill sets, you should not have customer success doing renewals, service, cross-sell, upsell. Those are all very different capabilities.
Yeah. So just to add our perspective a little, we've certainly had a lot of account managers who become really embedded in their accounts to the point where they feel uncomfortable selling because they've developed these long-term relationships, they're friends. Selling feels uncomfortable and unnatural to them at some point. A lot of times we see those folks move into a customer success role if it's an option. But we've also seen where, you, again, to your point, you might have a hunter who owns the customer for the first year and they can generate expansion revenue and upsell and all that right from the beginning. But then you have a handoff. They've just started to get comfortable. So we don't have a perfect answer, but we've also seen where if you don't have, even if you have a lot of handoffs, if you don't leverage technology to reduce that hospital experience where every time you talk to a different person, they're asking you your symptoms all over again, you will have that, and that is an aspect that creates customer friction. So I think you can have multiple handoffs as long as they're seamless. And we've also seen where account managers, when we do our digital time study, they spend way too much time on solving customer support issues or technical issues, right? So again, it gets back to that role clarity a little bit.
Yeah.
That help?
So you talked a lot about creating value once you already own a company, but as you are preparing your portfolio companies for the next sale or for an exit, what do you do and how do you make sure that your RevOps teams are on board with the plan and executing based off of what you think the next buyer will need to see?
Do you want to start? I did the last one.
So this is I can't believe this hasn't come up before. In my view, and I think Caroline shares this view, RevOps is a critical function in a sales organization. Now, when you should build a RevOps organization, I think depends on the size of your team, growth, how many markets you're in, how many salespeople you have. So there are a lot of variables that I look at to determine, are we ready for a revenue operations function? Some organizations go decentralized and they'll have a sales ops, marketing ops, CS ops. That can work. I'm not a big fan of that model. I prefer to have it centralized. But what is RevOps' role in preparing for a transaction like that or an exit? I think it varies. First and foremost, long before you get to the stage of being ready for that exit, you have to help the organization achieve the growth targets that we want to get to. You have to help build, the rigorous operational excellence that we need. Strong sales process, good forecasting process, good reporting and KPIs. So all of those things that you probably, I'm assuming you're RevOps or you've got somebody in RevOps on your team?
Yeah, we have sales strategy and sales operations and together.
Okay. All right. And so you undoubtedly know the value that RevOps plays here, but their job first and foremost is to make sure that we've got visibility, transparency into how the team is doing, how we're doing in certain segments, how we're doing in certain verticals, and that we are being really rigorous about running the revenue engine. I think you heard Caroline use the word chassis. Like, that's really critical. They're at the center of that. And if they're doing their jobs well, they are building that sort of operational excellence, building that transparency through reporting, and then they're working with the CRO and the CEO to get all the data ready. Heather's done multiple acquisitions. She's been involved in being acquired, so she can tell you, like, there's a lot of data that has to get prepared for these things, and oftentimes RevOps is right there with finance, preparing a lot of that data. So it's a heavy lift, But I'd say first and foremost, make sure that we've got operational excellence locked down and that we're running the business that we need the way we need to grow at the aspirations that we all want. Simple answer, but I think that's important.
Yeah, and I think, we will prepare teams for exit, just running the same areas of focus that we do, when we're just coming into a company or through diligence. And, I always share, it's amazing how many don't have the data that supports the key strategies and key plays that explains the performance across a period of time. And having command of what the levers in the business are, what have been pulled, the relative success or failure of it, is massive. It's amazing how many times we'll do diligence, so they're exiting from another company, and they can't tell me why the business is performing the way that it is. And if they can, it's anecdotal. So, first and foremost, the data and the trend line data sitting behind the key levers, key indicator metrics, whatever they may be, I think is one of the most important elements of preparing for an exit. But it's also just one of the most important elements of running a commercial function as well.
I've seen, in diligence, I've seen a RevOps, and we talked a little bit about this yesterday in our session with Mike. I've seen RevOps people be able to look at the trend data, and we look at a 18, 24-month time horizon on things like top of funnel metrics that Kurt was asking about earlier, all the way through to pipeline and closed won. And in one case, we saw this massive spike in leads come into the top of the funnel in Q1 of 22, I think it was. We were looking at this asset last year. And a correlating spike in revenue. We're like, holy smokes, that quarter looks really different right there. What happened? And the CEO couldn't remember what happened. The person who answered that question, RevOps. Oh, we did this big campaign. Here's what we did. We tried these 4 or 5 things. And we're like, great. Like, somebody has to have that historical knowledge of when the big dips are and when the big spikes are. That's a critical role for RevOps to play. And then we asked them, why didn't you keep doing that? Like, why didn't you do more of that? And that wasn't a great answer. So I can tell you how that conversation went. But that's a critical role for RevOps to play too. I'm going to call it the historian, because there are often sort of blips in the radar and in that trend line, and they are at the center of it and know, what did marketing do differently that's caused that spike? Or did we shut down paid promotion online that shut down our lead volume? Like, they're often going to be the people that know that. Helpful? Kurt?
Well,
sorry.
Go ahead.
I was just going to say, it sounds like it's a journey from revenue operations to revenue data provision to revenue
Insights and analysis. And it's probably like a lot of other journeys, the team that you start out with doesn't have the skills to do some of those higher order things. So
absolutely.
I imagine that when you're prepping companies for sale, you're making sure that you have the team in place to provide that higher order analysis and insights that can, not just the instrumentation on the business, but like why those are important key performance indicators and what we do to influence them.
Definitely, yeah.
Yeah, and I think the fact that you said you have strategy and ops together, one cannot exist without the other. So if you have a RevOps team that isn't front and center in developing and influencing the strategy, I think it's a huge missed opportunity, because you don't get the trend line analyses unless you've worked your way back and you have well thought out sales and business processes that are going into a system, even if it's Excel, where you're capturing the data points necessary in order to then go into well-defined metrics that then go into analysis and insights that then go into trend line analysis and predictive measures. But you can't start down here. You have to start down here, and fundamental to that is, what is our baseline strategy? I think where we'll get to, but really there's the good and bad news is oftentimes it comes down to back to the basics. Mm-hmm. Like, sometimes we can get so over sophisticated with things that we take our eye off the ball in terms of our managers and reps spending the majority of their time in the field. Mm-hmm. Are we measuring the right 3 to 5 indicator metrics, right? Do we pay people on what they're in control of or not? Do we have the right role design? Is it clear? Are they clear if we ask them? I mean, there's the great thing is there's no brilliance to it, but sometimes we can get so far ahead that we forget, in the marathon that we forgot, do we have the right socks and shoes on, right?
Kurt, you're raising a really good point. The evolution of the RevOps function is a really important one. What you have today may not be what you need tomorrow, stating the obvious here. But today, you may just need somebody who's really disciplined at building rigorous process.
Yep.
And who understands how to drive enablement on that process. But tomorrow, when you're ready for exit, you may need somebody who's really sophisticated at Power BI and can run some really interesting analytics on your cohort data for your customer base or segments that you're going into or markets that you're in. So it is really important to step back and say, what do I need today? And if you're PE backed, what am I going to need in 3 or 4 years? Because it's very likely that role, that function needs to evolve. So it's a great question.
Yeah.
Richard, your point on sales coaching really hit a nerve. If you think about it, the majority of the time, our first line leaders that we're promoting are just our best sellers.
Yeah.
And their natural desire is to go back to selling immediately. You see it happen time and time again, and you get them to coaching, and then they go back to selling again. So, is there anything you're doing to make sure your portfolio accounts their first line leaders specifically are sticking with the coaching to help the overall company growth?
Well, I would start with the premise that you laid out, which I think everybody is guilty of, which is we're promoting our best sellers to managers. I don't actually think that's a good idea. In the same way that really phenomenal baseball players don't make really phenomenal baseball coaches, sorry for the sports metaphor, I think that's true in selling too, right? Your best salespeople often are going to be exceptional at selling, but they're not really sure why they're exceptional. I can't tell you how many high-performing sales reps that I've interviewed when we're doing some analysis on why a business is doing well or not doing well. And I asked them to walk me through what their sales process is and what makes you so effective. And they're like, oh, I'm just really good at process and I'm really good at talking to customers. I was like, well, unpack that for me. I was like, well, I don't know. I'm great at conversation. And I'm like, it's not what I'm looking for. They cannot unpack oftentimes what makes them exceptional. Right, so I don't want to steer you clear of promoting top performing reps, but I would want to understand, can they translate what makes them really well, and then can they teach it, right? Can they do the hard yards, which is going to be hard for really great salespeople to sit behind a desk and talk about pipeline management and talk about preparing for a meeting. They'd rather prepare for their own meeting and do the hunting, right? And so what I often encourage CROs to do is make sure that you understand whether or not that individual that you want to promote has the understanding of why they're good and the capability to translate that to others and actually want to do it. Then it's about making sure that you structure the role in the right way. Do they want to do a little bit of selling? In which case I make them a player coach. Still let them sell a little bit, right? But also have them doing some coaching and training. If they're really sort of done with selling, and we saw a lot of this at CB, great salespeople go on to be effective sales managers. That happens for sure. So I don't want to say it doesn't, but you need to make sure you understand it and then equip them to actually have an impact on the business and let them scale. Great salespeople who we worked with at CEB managed 10, 20, 30 people sales teams, and they were exceptional at it. But you have to start with, can they translate what they know and what they do to other people? And are they really, truly done with selling? They're ready to move on. Otherwise, you're going to have that sort of push and pull where they're going to want to go back out in the field.
I mean, a question I always ask is, why do you want to be a sales manager? And what 90% of the time, they'll say, because there's no other way to advance my career at this company. And so if you say, well, you can get to SVP as an individual contributor, what if you help develop the path to that? And they'd say, and more money. And you say, if you bring in more revenue, and they're like, sign me up for the rest of my career. So oftentimes it's that we don't have the right career pathing in place for them, and they think that's the only way to advance.
Agreed.
And we had that at CEB, for sure, and I see it all the time too. So there's often do you really want to be a sales manager or do you want to advance your career? Which
That's
is
a good question to ask. I agree. Yeah.
Excellent. Well, we're almost out of time. So I do want to ask one last question for our panelists, and then we will still have time for a few more questions. So we have a mix of people in the room. We have RevOps, we have enablement, we have CROs, sales folks. Can you give us one piece of advice, and you can choose the one you want to target to leave them with? Or if you have more broad advice, that's fine too. What can they do when they get back to their office or kitchen table?
Boy.
Just one.
Yeah.
Well, you've heard a lot, so maybe something you didn't cover or just want to read.
Yeah. So I'll start very broadly, but narrow into the one. So what I'd say is be super rigorous about what your commercial strategy and your operational strategy looks like. I see far too many CEOs say, yep, we're going to grow by 15%. And we're going to sell these 3 products, and we're going to launch a couple new products and maybe get into a new market. But they're not super clear about the how. What's the path to get there? How are they going to get there? And so I'd say take the time to really slow down and say, what is our customer journey map? What does that look like? What is our sales process? Too many CEOs don't really understand what are the stages in the sales process and what's the entry-exit criteria. You might say, oh, they shouldn't get to that level of depth. I think they should initially when they first take that job. You should understand how somebody becomes a customer. But I'll give you one specific example that I would take away, and you can apply this across other areas too. We've got a couple of colleagues on our team, like Caroline. We've got a large operating group, 30 operational professionals. All of us have very specific functional expertise. We have 2 of my colleagues who do a deep dive on leads management. And what they do is they bring sales and marketing together and they say, okay, what are the various ways that a lead comes into your organization? And they whiteboard this out. What happens when they fill out a form? And I mean in excruciating detail.
Yeah.
How many fields are on the form? What happens with it? Where does it go in the system? Where does it go to your people? And they do that. What's next? What's next? What's next? All the way through to closed won. Yeah. And inevitably what we find, and I should say I can't take credit for them, inevitably what they find is there are broken processes along the way in systems. HubSpot's not talking to Salesforce, so SDR is having to grab the lead from HubSpot and recreate it, and they're taking credit for the lead. Marketing's pissed off because they didn't get credit. Broken process in the system and broken sales and marketing process and lack of accountability. I would encourage you to really do a deep dive. If nothing else, do customer journey map or do leads mapping. You will learn a ton about your organization and how effective you are or are not in bringing your customers into the top of the funnel and taking them all the way through to close won. And that, I think, will be the beginning of your journey on sort of revamping how effective you are. Because if you can't take a lead all the way through from top of the funnel to close won and understand every step in the process, you're probably losing money or wasting money.
Excellent. Carolyn?
You stole my answer. No, I'm just kidding. No, I completely agree. It's amazing to me how many, we all do it, right? Our day-to-day is focused on running our business, but how many companies are inside out versus outside in, for sure. So I can't stress the customer journey piece enough. I think it illuminates things in a neutralized way because you're trying to look at your business from the customer's perspective and not from who owns this or who owns what. And it does neutralize it, and it's one way to bring everybody together. Mm-hmm. The other thing is, take a look at your ideal customer profile. If you look at your last 12 to 18 months of performance, you may be seeing churn or price degradation or downsizing if you're in a licensed business, downsizing in ways you haven't before. And unless you can really dig into that and then take a look and say, is what we had as our ideal customer profile where we're starting to see on the far end, we're not growing as much, we're not expanding, we're shrinking. And don't be afraid to take a look at that again. Particularly now is the perfect time going into strategic planning and really prioritize who the sales reps are targeting.
And
If
take
there's
that,
one piece of advice, it's make sure they're going against the best fit customers for what you have today.
and take that all the way through to territory design.
Yes.
Like you should have tiered accounts that they are going after. If you're not doing that, then you just have an ICP on paper, right? It's serving no value. And I will tell you, to Caroline's point, you should measure that regularly. We had one of our portfolio companies who reached out to me and they said, Richard, this was early 23. They said, Richard, we're starting to see the CFO get involved in more and more conversations, and we're seeing more buyers involved, and the decision-making is sort of drawing out a little bit. And I was like, tell me who your ICP is. And they walked me through it. I said, okay, let's take a look at the data of all the leads that have come in the last 6 months. Let's take a look at the customers in the pipeline. And what we discovered is their ICP was shifting on them right in front of their very eyes, and they had no idea. They had been selling mid-market, that was their motion, and the inbound leads that were coming out at them were shifting to enterprise, and they were getting more and more enterprise deals, and they didn't realize it, that their ICP was shifting right before their eyes. And so you have to look at this regularly and understand where are you in the market versus your competitors, where's the demand coming from, because it's a very different sales motion to go after enterprise versus mid-market. So you should look at it as Caroline said and look at it often. Yeah.
Excellent. We are out of time, but I really want to thank Richard and Carolyn for your participation, wisdom, and experience with us today. Thank you so much, and everyone for participating.